Welcome back to TaxAid and Cash Oregon's online video classes on Oregon taxes. This is the last module of 4. Prior to this, you've already finished your work on federal taxes, and you've completed the modules introducing you to Oregon tax law, as well as the work on Oregon-specific items. Today, we'll be talking about residency, registered domestic partners, and the new Oregon transit tax. For Oregon residency, we'll talk about the different types, the forms used, and a little bit on how to complete the return for part and non-year resident taxpayers. We'll talk a little bit about registered domestic partners and what it means to file a return with that filing status. And we'll also talk about the impact of the new Oregon transit tax. How much is it, and who's responsible? First, let's talk about residency. There are 3 options. A taxpayer can be a full-year resident, a part-year resident, or a non-resident. Sounds simple, right? Most of the time, it is. You're a full-year resident of Oregon if you live in Oregon. Makes sense. But you're also a full-year resident of Oregon even if you live outside of Oregon, if you meet certain conditions. If you think of Oregon as your permanent home, and Oregon is the center of your financial, social, and family life, and it's the place you intend to return when you're away, you're still a full-year resident. Essentially, it's where you hang your hat. A good example is a student at a university out of state. That student might return to Oregon upon graduation and consider themselves an Oregonian the entire time they're away. More practically speaking, you're still a full-year resident if you temporarily moved out, or if you've moved back after a temporary absence. This applies to students as well, or a remote worker who's on a travel assignment. Some good questions to ask if you're not sure are, where do you register to vote? And what state issued your license plates? If the full year criteria don't apply, and your permanent home was outside Oregon all year, you're a non-resident, as you might guess. And you're a part-year resident if you've moved into or out of Oregon during the tax year. But remember, this does not include temporary moves. Oregon uses 3 basic forms, or really 3 versions of the same form, for each residency type. The standard OR40 is for full-year residents, the 40P for part-year, and the 40N for non-residents. TaxSlayer should select the proper form after you've selected the residency, but it's a good idea to double-check on the printed copy. On forms OR40N and OR40P, Oregon tax for non-resident and part-year residents is calculated using the percentage of Oregon taxable income to the entire federal income. So we still need to complete the federal return, even if we're not filing on the federal side. So what's counted as Oregon taxable income? Well, it all depends on residency. Oregon full-year residents are taxed on all income, just as in the examples we've used in previous modules. For part-year residents, it gets a little trickier. A part-year resident is taxed on all income, but only during the time that they lived in Oregon. During the part of the year that they were a resident in another state, they're only taxed on the income from Oregon sources, such as an Oregon-based employer. A non-resident is only taxed on the income from Oregon sources all year. For example, a taxpayer might live in Vancouver, Washington, and commute to Portland. If their only income is from that Portland employer, they'll file a non-resident return, but since all of their income is Oregon source, their Oregon taxable income will be the same as federal. And if the taxpayer's moved around or has worked multiple jobs during the year, be sure and ask good questions and take good notes. It's really important to determine the residency correctly ahead of time. Let's break it down once more. So, a full year Oregon resident pays tax on income from all sources, and a non resident only pays income tax on Oregon sources. A part year resident gets trickier because depending on which part of the year, they have to follow both sets of rules. But while they're living in Oregon, they follow the same set of rules as a full year resident, and during the time that they aren't in Oregon, they follow the same rules as the non resident. So calculating the percentage is an additional step, but taxpayer will do that for you. So far, we've covered the residency test and a little bit about taxable income. So let's apply that to the return. First, a few pointers. During the intake and interview section, make careful notes about Oregon income and especially dates of residency on the Oregon ASCE worksheet. Next, remember that the federal AGI is the starting income for the Oregon return, independent of residency. TaxSlayer carries a lot of information over from the federal return, and we'll talk about exceptions in just a minute, but it's important to remember that once residency has been selected in TaxSlayer, it cannot be changed without deleting the state return and starting over. So again, be sure to determine it correctly ahead of time. When starting Oregon returns for part year residents, the first thing you need to do is enter the dates of residency that you noted on the ASCE worksheet. After you've completed the federal return, you'll open the state section for Oregon, select part year, and remember this can't be changed, and the first item should be basic info. Click edit and enter the dates of residency in this section. All other basic info should flow from the federal return automatically. And of course, this step isn't necessary for full year or non-residents, since they lived in the state either the entire year or none at all. The section just below basic info on the state return is income subject to tax. This is an important place for both part year and non-resident returns. Using the notes and information that you've taken down during the intake process, you'll apportion income that's Oregon sourced or otherwise subject to Oregon income tax. Some income, like wages, should flow automatically since it's broken down at the bottom of the W-2. But other things like bank interest and dividends will need to be input manually since the state is not recorded at the federal level. In rare cases, it might not be clear how to apportion or allocate that information, but for these, just consult Oregon Pub OR 40 NP for part and non-year residents. Here's a screenshot of the income subject to tax screen. Note that you only have to input the Oregon portion of the income into this screen, not the whole amount. TaxSlayer will compare this to the federal and automatically do the calculation for the percentage of Oregon taxable income. Here's an example of the form as it's printed. Note the two columns, federal column, F, and the Oregon column, S for state. TaxSlayer will fill these in for you from the federal return and the information that you put on the income subject to tax section. The sample is from the Oregon 40P, you see at the top, but the two-column page appears on both part year and non-resident returns. In rare cases, you might need to calculate the Oregon percentage of taxable income yourself. An example would be a non-resident taxpayer who works for an Oregon employer but sometimes works from a home office in Vancouver. In this case, you divide the days worked in Oregon divided by the total days to reach that percentage. Fortunately, apportioning Oregon income is the hardest part. As long as the dates of residency are put in correctly for part year returns, and all of the manually entered items are input correctly, the rest of the return should be just as you've learned in the previous modules. So complete this, and voila, you're done. Next, let's talk about the Registered Domestic Partner Filing Status, or RDP. On the Oregon return, it's effectively exactly the same as married. However, the RDP filing status is unique to Oregon and just a couple of other states, and it's not recognized by the IRS for use on the federal return. So processing these returns can get a little complicated. They're increasingly rare, so there's a good chance that you won't run into one at all season. But let's take a look. So if you have taxpayers with a status of RDP, here's how you do it. Remember that the state uses federal AGI to start the return, and for state purposes, registered domestic partners are effectively married, but on the federal side, they're not legally married, so we have to create a what-if return just to get the numbers, but then we won't file it, we'll just attach it to the Oregon return. But once that's done, we'll go back, erase the what-if return, and then restart it from scratch using a single filing status. Oh boy. This might be the trickiest thing you run into. So let's do this. Building a what-if return is a really easy place to make an error, and it can literally be about 3 times the work. If you're a new volunteer and you run into a status RDP, please let an experienced volunteer help the client. Simply put, it's tricky stuff. The last thing we'll discuss in this module is the Oregon State Transit Tax. It's new for the 2018 tax year. And because it's new, at the time of this recording, we might not have all the information. But I'll give you a high-level overview and talk a little bit about what it is, and then just take note in class for any updates on policy, forms, tips and tricks, and things like that. In a nutshell, it's 0.1% of wages, and most of the time, the employer is responsible for collecting it. Oregon employers were notified early in the year that they'd need to be withholding this tax, so they should be collecting it already. And if they're not, they may be responsible for paying it on the taxpayer's behalf. Non-Oregon employers are not responsible for collecting, so an Oregon resident working outside a state must self-report. That is, they'll be responsible for filing and paying. This will be on Oregon Form ORSTI for statewide transit for individuals. Non-residents are still responsible for paying on anything that's Oregon taxable income. But if it's over-collected, like the example earlier of the taxpayer who sometimes works from home for their Oregon employer, they can also use ORSTI to apply for a refund. So if the taxpayer is in Oregon and the employer is outside of Oregon, they're probably going to need to file. And if the taxpayer is outside of Oregon and the employer is in Oregon but they spent some time working outside, they may be able to file for a refund and get some of their withholding back. But for anybody else, no action should be needed. Here's a copy of the most recent draft of the form. But again, pay attention in class for how to file, who we can file for, and what exactly is going to be in scope. Well, that about wraps up this module. So if you have any questions about this or any of the other material, be sure and make good use of your resources. There are Oregon calculators and tools available online. Even in the Portland metro area, we rely very heavily on eugeneta.org. And get to know your Oregon ASCE worksheet and be prepared to use it during the intake and interview process. And be sure and look at Oregon Pub 17 for state-specific material and OR 40-NP for information on part and non-residents. And last, bring your questions to class. The class instructors are here to help you. And during the tax season, don't be shy about asking questions of your peers or your site coordinator. Let's have a great season. So thanks for watching the online classes, and thank you so much for volunteering.